It's a great time. We have come in again for a session of financial reporting and analysis. So this is your number one instructor in financial reporting and advanced financial reporting, CPA Choi. So today I'm going to do on how you are supposed to prepare the published financial statement that is according to International Accounting Standards 1. So remember that published financial statements, these are the statements prepared by organizations for the publication purpose. And this is where these are the statements which investors obviously will focus on in order to know the trend and the way the company is behaving so that you can be able to invest in that entity. So since I have said that these are the statements made for publication purpose, so I have to mention first which are these statements meant for the publication purpose. So we have the statement of profit and loss and that of a statement of comprehensive income. So it's a statement of profit and loss and other comprehensive income. We have a statement of changes in equity. We have statement of a financial position, and we have the cash flow statement. So, and you have to show the notes to the accounts. So to understand more about this published financial statements, I would like to do a question which was done in the financial reporting and analysis. That is the intermediate level. So that is the December 2021 question. December 2021. That is under the December 2021 sitting, question 5. So they were saying that the foreign trial balance rates to Pawab Limited as at 1st March 2021. So you have the items there under the trial balance. You know those items. It's all about assets, liabilities, incomes and expenses, and some of the equity items. You don't have to read. In the additional information now, this is the area of focus for us. They are saying that on 1st April 2020, the directors of Power Limited resolved that the financial statements could show an improved position if the property was revalued to market value. At that date, an independent valuer valued the land at 160 million and the building at shillings 800, that is 485 million. The remaining life of the building as at that date was 25 years. Power Limited does not make a transfer to retained earnings for excess depreciation. Ignore deferred tax on revaluation surplus. So in short, what they're asking you here is all about to determine either revaluation gain or a loss. Because now you can see the independent valuer valued the land and the building. So he valued land to 160 and the building to 485. So compare with what you have in the trial balance, then determine if there is a revaluation gain or loss. Determine if there is a revaluation gain or loss. So that is the first thing I will do. So that is working number one. So my working number one, working one is all about the determination of revaluation gain or loss. So revaluation gain stroke loss. So remember here we have the land and we have the building. We have land and building. So what you do here, you talk about the revalued amount. So which revalued amount? It was 160,000, and this is 485,000. The building, as per note 1. Then compare with the net book value of the land, of which land will be at cost, but for building you have to minus accumulated depreciation. So remember that land and building is just a property. So in the trial balance, you will realize that they have mentioned the word property. So property stands for land and building. So that is what they have provided as property at cost, of which land is 146,000. Then for the for the building, so to know the building, you have to take 732 minus 146. So remember that our question is in terms of thousands. So this one is in terms of thousands. So this one would be 146,000. Then this one, first you have to deduct. So first you have to take your, the total value of the property was, 732. So you take 732, 732. So you take 732. So 732 minus 146. That is 586. So you take 586,000. You minus the accumulated depreciation so that you can be able to get the net book value. So let us check the accumulated depreciation of the building was at which value. So that one is provided in that trial balance. So which is so accumulated depreciation 1st April 2020, building 122,000. So that is 122,000. So if you take 586 minus 122, that is 464. So that is 464. So you can see now here, the run and buildings, they were revalued upwards. So that is a revaluation gain. There was a revaluation gain. So we compare the net book value and the revalued amount. That is 160 minus 146. So this is 14,000. This is 14,000. So we have 485 minus 464. So and this one is 21,000. So the total revaluation gain, will be, so the total revaluation gain will be 21 plus 14. So this one is becoming 35,000. That is becoming 35,000. So that is 35,000. So this one will go to the other comprehensive incomes. So that one will go to other comprehensive incomes. Then what you can realize that after they have revalued the building, they told you that the building was having a certain useful life. So which means that if you are given the useful life of the building, the remaining useful life of the building, you determine the depreciation on the building over the useful life. And that method is called straight line. That method of depreciation is called straight line method. It's called straight line method. That is what they say in here in note 1. The remaining life of the building as at that date was 25 years. Was 25 years. So that is 45,000 divided by the 25 years, so that you determine the depreciation for that year. So 45,000 you divide with 25. You divide with 25. So you get 19,400. You get the 19,400. So the next additional information is concerning depreciation again, but now for the plant and the equipment using the reducing balance method. So plant and equipment is depreciated at the rate of 15% per annum using the reducing balance method. Or the depreciation is charged to cost of sales, but none has yet been charged on any non-current assets of the year ended for the year ended 31st March 2021. So remember that for the reducing balance method, you have to take your cost of the plant, you minus accumulated depreciation, then you multiply with that 15%. So the cost of the plant and equipment you can see is 427. You have to minus the accumulated depreciation of 85,400, then multiply with 15%, the balance. That is how you get the depreciation using the reducing balance method. So depreciation on plant and equipment. So the depreciation on plant and equipment. So for the depreciation on plant and equipment, so this one is based on 15% of the cost minus accumulated depreciation. So 427,000 minus 85,400. So that one I'm getting 51,240. So that one will be classified. Remember, you have to classify expenses based on functions. That is under cost of sales, either administrative expenses, or we have a selling and distribution, or at the finance cost. So that is the main working you have to do under the income statement. The main thing you have to do in the income statement is the classification of the expenses under the functional heads. So I will interpret that more when time comes of doing that. So let's first finish interpreting the additional information. So the next additional information was additional information number 3, where you are told that Power Limited estimated that an income tax provision of 113.8 is required. So for the year ended 31st March 2021, so the balance on the current tax in the trial balance represents the understroke of a provision of the tax liability for the year ended 31st March 2020. As at 31st March 2021, the tax base of Power Limited net assets was 292, less than the carrying amount. So the income tax rate of Power Limited is 30%. So on that case, on this scenario, what you are required to do is all about the determination of income tax. The determination of income tax, of which we will say that income tax is equal to the current tax plus minus, so increase or decrease in deferred tax, increase or decrease in deferred tax. We apply tax under provision, you minus tax over provision, you minus the tax over provision. So on this case, remember that the current tax is the tax which was paid in the year ending 31st March 2021. So remember that our financial year ends this period. That the tax which was paid in that period, the tax which was supposed to be paid, the tax which was supposed to be paid in the 31st, for the year ending 31st March 2021, that corporate tax is what we call the current tax. So the tax payable in the year under consideration. So you can see you were told that in this question you were told that Power Limited estimated that income tax provision of 113.8 million is required in the year ended 31st March 2021. So that is the current tax. So the 130,800. So then now we have to check if we have deferred tax, the provision, or there was just a reduction. So that is if there's a deferred tax liability or a deferred tax asset. So in this question, they never provided the deferred tax direct, so that you can be able to determine if there's a deferred tax asset or liability. But you need to understand that when we talk about IAS 12, that is accounting for income taxes, that is both for the current tax and deferred tax. We always say that for you to get deferred tax, deferred tax is equal to the temporal difference times tax rate. Temporal difference times tax rate. Of which you need to know that we have two types of temporal difference. We have the taxable temporal difference, and we have the deductible. Temporary difference. So for the taxable temporal difference and the deductible, you need to understand what they mean. But before that, you need to know how to get temporary difference itself. So temporary difference is equal to the carrying amount minus the tax base. Carrying amount minus tax base. So for the taxable temporal difference, so the taxable temporal difference is whereby you find that the carrying amount is greater than tax base. So the carrying amount is greater than tax base. So for the deductible temporal difference is whereby you find that the carrying amount is less than the tax base. So for the taxable temporal difference, it leads to deferred tax liability. Then for the deductible temporal difference, it leads to the deferred tax asset. It leads to the deferred tax asset. So if you go back to your question and read, there's something provided there concerning carrying amount and tax base. And that information will assist you to get your temporal difference. Will be able to assist you to get the deferred tax, not even temporal difference. So you were told that in this last sentence here in note 3, as at 31st March 2021, the tax base of Bawab Limited net asset was 292, less than the carrying amount. So which means that the carrying amount is higher than the tax base. So that is a taxable temporary difference. So once you have your taxable temporary difference, you multiply with the tax rate. So the taxable temporary difference. So you have one type of temporary difference. So that is the taxable temporary difference, whereby the carrying amount is greater than the tax base. So once you have that, you multiply with your tax rate of 30%, which is given there, you get your deferred taxes at the end of the period. So that is what you do here. So 292,000, you multiply with 30%. So if I do that, my deferred tax as at 31st March, that is at the end of the year under consideration, will be, so 292 times 0.3. So that is 87,600. So 87,600. That is 87,600. So after getting the 87,600, what we come here and do is open a deferred tax account. We have a deferred tax account. So remember that taxable temporary difference leads to deferred tax liability. So we have a balance brought down here. We have a balance carried down here. So the balance carried down is the one we have computed, 87,600. So the balance brought down is now the one from the trial balance. So if you check in the trial balance, there's a deferred tax given there. There's a deferred tax given. There's a deferred tax which is given. So be keen and check the. So you can see there's a deferred tax here of 97,600. Is that deferred tax of 97,600? So for 97,600, so that is the balance brought down. That is from the trial balance. So you can see, you can be able to realize that you can be able to realize that there is a reduction of 10,000. So that is a deferred tax asset. So which we say that to get your income tax is equals to the current tax, which we talked about. Then now there is an increase or decrease in deferred tax, whereby we have a decrease of 10,000. So which is a deferred tax asset. Then now we check if there's tax or under provision. If there's tax under provision or a tax over provision. So they said that the balance of current tax in the trial balance, the balance of 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 current tax in the trial balance represents either over provision or under provision. So the balance of current tax is 12,800, which is on the credit side of the trial balance. 12,800. So 12,800 is on the credit side. is on the credit side of the trial balance. So how do you know that it's now an under or an over? So remember that if it's a tax under provision, this is the tax they were supposed to pay in the previous year, or which they never paid. If it's an under provision, it's a tax which they were supposed to pay in the previous period, but they never paid. So they paid less. If they were supposed to pay 10 million, they paid 8. So they under provided by 2 million. So the 2 million is supposed to be paid now in the current year. So, and since it's now a tax they would be paying in the current year, remember that is an expense. And you know that expenses in the trial balance are debited. You debit, it could have been on the debit side. For the over provision is what they overpaid in the previous year. They were supposed to pay 10, but they paid 12. So they over provided by 2 million. So an over provision will reduce the tax of the current year. So it's an income in the current year. So that one appears on the credit side. Appears on the credit side. So which means that the 12,800 appearing on the credit side is a tax over provision. So a tax over provision will reduce this tax of the current period, the 12,800. The 12,800. So we have to reduce so that we get which figure? We take 113,800 minus 10,000 minus 12,800. So that is 91,000. So that is the 91,000. That is the 91,000. Then the last thing they talked about bonus. We talked about bonus. It's something they mentioned about the bonus. So under the bonus, they said that in the last additional information, they said that Bawab Limited made a 145 bonus issue on 31st March 2021, which has not yet been recorded in the books of accounts. So the company intends to utilize the share premium as far as possible in providing for the bonus. So remember that bonus is all about whereby the company decides to give the existing shareholders shares for free based on a certain proportion. Like now here, the company decided to give the existing shareholders 1 share for every 5 they have. So 1 share for every 5 they have. So 5 for everyone. So not 5 for everyone, but for every 5 they have, they are provided with 1 share for free. So that is the proportion. That is the proportion. So for every 5 shares they have, they were given 1 for free. But it must be to the existing shareholders. And they say that what was financing that bonus issue, it was the money from the share premium. What was from the share premium? That is what they said. So it means that we have to reduce our share premium by the amount of the bonus they were giving out when I will be doing my statement of financial position. So in order now to determine the shares which the shareholders were having, I will go direct to the ordinary share capital. You can see my ordinary share capital is 560,000 per share. That is shillings 10 per value. So the number of shares held by the shareholders is all about 56,000 shares. So the 56,000 shares. So here you come and say, what about 56,000? So 56,000 times 1/5. So how many shares did they give out as bonus? So 56,000 divided by 5. So they gave out 11,200 shares as bonus. So their value being per share was shillings 10. So since per share was shillings 10, you can see we are getting 112,000. So that is what they used in giving out the bonus. So the 112,000. So after you are done with the interpretation of the additional information, so now you need to understand that for you to do the income statement, remember that the income statement contains expenses and incomes. So the expenses must be classified under the various functional heads. So the expenses are not supposed to be shown individually in the statement. of profit and loss and other comprehensive incomes, which was previously called income statement. So you will either classify expenses under cost of sales. The expenses will be classified either under administrative expenses. Like now, the office related expenses will go to admin. Then for distribution, we have to classify some expenses there. Like now we have advertising, will go to distribution. If you are paying commission to the sales agent, we will go to the distribution. We have the carriage outwards, so we'll go to the distribution. Then the last thing is all about now, the interest related expenses will be classified under the finance cost. So the expenses must be classified under those four functional heads: under cost of sales, under administrative expenses, under distribution cost, and finally under the finance cost. So that is the major thing. Even if after you have interpreted your additional information, you have to do that classification. So that is why we come here and say statement of expense allocation. Statement of expenses allocation. Statement of expenses allocation. So the statement of expenses allocation. So the statement of expenses allocation. So we have the cost of sales. We have the admin, that is administrative. And we have the distribution. For finance, I don't have to show it here because it will be containing just interest. Interest, which is just one on that is interest on the bank loan from this question. So I don't have to waste a lot of time showing just one classification. It doesn't have many expenses, just interest. So you start with the balances, which are given as per trial balance. So balances as per the trial balance. So if we check our trial balance, we will be able to realize that there is some balances which are given there. For the cost of sales, which was 2 million, 6,900 shillings. So what about admin and the distribution? So anyway, let me show all of them. So for the cost of sales, you can see it's 2 million, 2 million, 6,900. So 6,900. For the distribution, you can see it's 1 what? For distribution is 164,700, and for admin is 201,300. 201,300. 201,300. After we have recorded that balance is brought down, you go to the additional information from one to the last one, from the first one to the last one. You check any expense which was in this additional information before we embark on the trial balance, again to check if there's any other expenses we have not recorded. So checking additional information number one, there was that depreciation of building. Depreciation of building, the one we did over the useful life, that is 485. We divided with, so it was 485,000. We divided with the 25. So the 19,400, that is the first expense. The next one is all about, so the next one is number two, the depreciation on plant and equipment. The depreciation of plant and equipment, again, we did that one using the reducing balance method. But now you need to know where to classify these expenses. Checking on additional information number two, the last sentence there, they said all depreciations is charged to cost of sales, but none has yet been charged on any non-current asset for the year ended 31st March 2021. So let us record those expenses concerning depreciation. The first one was on building. So on building, so the one was 19,400. So I think you remember we did that. That is 485,000. We divided with 19,400. Then we have the depreciation on plants and equipment. So we have plants and equipment. So the depreciation on plants and equipment was 51 to 40. So 51 to 40. It was here. This one, we took the cost, we deducted with accumulated depreciation, then we multiplied with the rate. So this is the reducing balance method. That is how we arrived at 51 at 240. So checking if there's another expense, checking if there's another expense to be classified under the functional heads. So note 3, it was all about tax, and note 4 was all about bonus. Going even back to the trial balance, I can't see if there's another expense because we have ordinary share premium, retained earnings, property, plant and equipment, accumulated depreciation, inventory, trade receivables, bank overdraft, deferred tax, trade payable, current tax, revenues, cost of sales, distribution cost, admin, dividends paid, and bank interest. So the bank interest, that is a finance cost. That is a finance cost. So that one will go to the finance cost. That is why I said I don't have to show it in this statement of expense allocation because it's only that bank interest which would go to the finance cost. So which means that even now here there was not they were not much. So that is, and this is 164,700. So 2 million. So I'm adding the first column for the cost of sales. So the total I'm getting here is 2 million. That is 20,77,540. So that is 2,77,540. So this is how you classify the expenses under the various functional heads. That is the rule as per International Accounting Standards 1. You don't have to show the expenses individually in the statement of profit and loss and other comprehensive incomes. But the expenses will be shown under these functional heads. That is cost of sales, administrative expenses, and distribution costs. So once we have done the classification now, I can go and do the statement of profit and loss and other comprehensive income. Under this statement, what we start from is what we start with is revenue. So if you check revenue, it's given direct from the question. So the revenue here is all about 2 million. That is 27,79,160. 27,79,160. So we minus now the cost of sales. So there's the cost of sales. There's the cost of sales. So the cost of sales is what we determine in our statement of expense allocation. So this one, which is here. So 20,77,540. So that is 2,077,540 shillings. So what we do, we deduct so that we get the gross profit. If there's another incomes, we add, but there's no any income there. So we take 27,79,160 and as the answer. So I'm getting 701,620. So that is the gross profit. If there was another income, I could have added here. So we add some incomes there, but there was none. So we raise expenses. So expenses, I said we talk about administrative expense. So the administrative expense, this one was direct. Even if we tried to check if there's another expense to be classified here, there was none. There was no expenses were to be classified under the admin and the distribution. So the only expense which were there is depreciations, and those were classified under the cost of sales as guided. So this one is the one you pick direct from the trial balance, so that we get the profit before interest and tax. So now the interest is all about the finance cost. So remember that I've said for the admin and the distribution, we just pick this direct from here. So this one is the same as the one which were in the trial balance. So we tried to check if there is another expense to be classified, but there was none. But in some questions, you might find that there's other expenses to be added to the balances you are given in the trial balance. So that is why I went ahead to show them in this statement. Because in some questions, you will come across some other expenses to be classified under admin and under distribution. So which means that they will be added to the balance brought down. But here there was none. Then after that, the finance cost is the one which was in the trial balance, the bank interest. The bank interest. So the one in the trial balance, the last item there, 10,980. So we have the 10,980. We have the 10,980. So if I take 701,620, 701,620 minus 201, 201,300 minus 164,700, I will be able to get 335,620. 335,620. So if I minus 10,980, if I minus 10,980, so 335,620 minus the 10,980, I would be able to get 22. 22 cannot be 22. So 335,620 minus 10,980. So that is 324. 324,640. So that is the profit before tax. Profit before tax. So the income tax, again, this is from working. You remember we did that working whereby we said current tax plus increase or decrease in deferred tax. So the decrease we minus plus tax under provision minus tax over provision. So we did this working here whereby there was current tax. There was a decrease in deferred tax, which is a deferred tax asset we deducted, and there was a tax over provision of 12,800. So we got 91,000. We got the 91,000. So that we have the profit for the year. So if we minus that 91,000, we get 233,640. 233,640. The next we add other comprehensive incomes. But before other comprehensive incomes, I have to add the retained earnings. Retained earnings brought down. Then I raise dividends paid. So that I get the retained profit for the year. Retained profit, balance carried down. Then after that is when I would add other comprehensive incomes. Other comprehensive incomes. So the other comprehensive incomes, remember, is that one of revaluation gain. So the revaluation gain on land and buildings. So for the retained earnings, so we have to check the retained earnings, dividends paid, we raise. So for the retained earnings is the one from the trial balance. So this is the retained profit from the previous year, so which is an opening retained balance for the current year starting on 1st April 2020. So the retained earnings, you can see now it's as at 1st April 2020 there, 241,560. Dividends paid, the one we deduct. Dividends paid to be deducted is the second last item in the trial balance of 24,400. So this one, we have said that it's 241,560. Then dividends paid is 24,400 from the trial balance. So if I take 233,640, I add a 241,560 minus 24,400. I would be able to get 450,800. Then I have to add the revaluation gain. So the revaluation gain on land and building was 35,000. So that is 35,000. So we have the 35,000. So that we get the total comprehensive income. We get the total comprehensive income. So total comprehensive income, that is plus 35,000. So that is 485,800. So you are done with the income statement. You are done with the income statement. The next we do now the statement of financial position. But no, before you do the statement of financial position, again, you need to understand which is the major working we have to do in that statement of financial position. So the major working you have to do in the statement of financial position is whereby you have to classify. You have to classify the tangible long-term assets, the fixed asset, that is, or the tangible long-term assets must be classified together, must be aggregated and named as property, plant, and equipment. So you don't have to show the assets individually, the fixed assets individually in the statement, but they will be shown under the property, plant, and equipment. Property, plant, and equipment. So these are some of the rules you need to follow when doing published, and that is what is checked during marking. And at the same time, I will show you on how this paper for a sitting was marked. It was very easy paper. It was a very easy question, and they were giving students marks for free. Just at the end of the video, I will be able to show you on how this paper was marked. So keep watching, and remember to subscribe. So before even you finish watching the session, subscribing is free, and at the same time, share the video to your friends while doing the financial reporting and analysis. So remember that there was land which was revalued and there was building. So that is the one which were in additional information number one. So land was revalued to 160,000. Rand was revalued to 160,000. What about the building? So even if building was revalued, again, it was depreciated over the useful life of 25 years. So they said that in this sentence here, note one, as at that date, I'm reading from second sentence under note one, under additional information number one. As at that date, an independent valuer valued the land and buildings at 160 million and the building at 485. Building at 485 million. So building was 485 million, but the remaining life of the building as at that date was 25 years. We did the depreciation of that. And I forgot that this one was in thousands, but we have maintained that. We have maintained that our figures are in thousands. All right, let's continue. So that is 485,000. You divide what? So it was 485,000. So the depreciation was 19,400. So you minus this. So you say 485,000 minus answer. So this is 465,600. 465,600. Then finally there was that plant and equipment, which was depreciated using the reducing balance method. So remember that the plant was at a cost of 427,000. So when it's on the reducing balance method, we have to reduce the accumulated depreciation first. But for the straight line, you realize that after evaluation to 485, I just minus the depreciation of 19,400 because that one was based on straight line method. You don't have to deduct accumulated depreciation. But now, since it's on reducing balance for plant and equipment, reducing balance method, you have to take your cost minus accumulated depreciation of 85,400, 85,400. Then you minus the accumulated depreciation. So accumulated depreciation was the one we got here. Remember, we took 15% of the balance after taking the cost minus accumulated depreciation. The depreciation for the year was 51,240. 51,240. 51,240. So if I take 427,000 minus 85,400 minus 51,240. So that is 290,360. So there is no another asset. So we can be able to get the total plus 465,600 plus 160,000. So that is 915,960. So that is now the property, plant, and equipment, the total PPE. So that is what we record under the non-current assets. We don't have to show the individual assets. Why am I doing all of this? Why did I even classify the expenses under the cost of sales, under admin, and under distribution? And why am I even hiding my information of not showing individual assets in the statement of financial position? Remember that I said these are the statements which would be published, to the public. So which means that, remember that also your competitors are looking at those statements. So in order to hide information from the competitors, you have to do this. Other than following the International Accounting Standards 1, the International Accounting Standards 1 rules, again, the main purpose of doing this is all about you have to hide your information from the public. Then remember now, after preparing these statements, they are going to be presented to the shareholders during the AGM. So during the presentation now, you have to give the notes to the statement. So these notes is now the explanations. So the policies which were used, the standards on how you are doing the accounting, using which concepts, in order to make now the shareholders who don't have the knowledge of accounting to understand on how these statements are prepared and at the same time to understand the meaning of the statement. Those notes to the accounts are given out after you have prepared the statement. But now in this question, they never mentioned us to give out the notes of accounts, the notes to the statement. So you don't have to do that. So once we are done with the property, plant, and equipment working, let us go now and present the statement of financial position. What about statement of a financial position? So it's as at 31st March 2021. So for the non-current assets, we start with the property, plant, and equipment. So for the property, plant, and equipment, you say 950, 960. There was no another intangible assets. If there was intangible assets, you show them individually here. This one are never classified under the PPE, the intangible assets, even the financial assets. But the wrong term. You have to show them there. Then we move to the current assets. We move to the current assets, of which under current asset we have inventory and we have the trade receivables. We have the trade receivables. We have the inventory and we have the trade receivables. So for the inventory and trade receivables, so the inventory is 324,500. That is 324,500. And the trade receivables is 469,700. 469,700. There's no other current asset. Right now, there's no cash, there's no bank balance, there's no prepayments. So those are some of the assets which can be put under the current assets. So here we have the total assets. Then we talk about equity and liabilities. Equity and liabilities. So for the equities and liabilities, we'll be talking about, so let's say, let me record it on the other side here. Equity and liabilities. We'll be talking about the ordinary share capital. But now remember that the ordinary share capital, we have to increase our ordinary share capital with the shares which were issued through bonus. So the ordinary share capital is 560,000 plus our bonus. So the bonus, there's a working we did for that. So the working we did for the bonus, this one. So we got 112. So the bonus, we got 112,000. But remember, they said that in addition information number rust in that question of ours, they said that this bonus issue has not yet been recorded in the books of accounts. So the company intends to utilize the share premium as far as possible in providing the bonus. So which means that the amount which was used to finance this bonus was from the share premium. So our share premium first from the trial balance is 160,000. 160,000, of which we have to minus the 112,000. Then there was a revaluation. The revaluation surplus, the one for land and building, the 35,000. You remember that? Then there's retained earnings. Retained earnings we have to record here from the income statement. So first, 560,000. 560,000 minus 560,000, not minus, plus 112. So this is 672,000. Then 160,000 minus 112. So this is 48,000. That is 48,000. So what about the retained earnings? So for the retained earnings, that is from our income statement. That is from our income statement. So from our income statement, we have the retained earnings of so the retained profit. So the balance carried out. So remember, we have the 450, 800. We have the 450, 800. So this balance here. Then after that, we have to talk about now. This is all about the total. Oh, this is owner's equity. The total there is owner's equity. The next we have to talk about non-current liabilities. Of which non-current liabilities there was deferred tax as at the end of the year, of which we were having the taxable temporal difference. I explained about it. The one they said that the carrying amount was less than. That is not the three. They said that as at 1st March 2021, the tax base of Bawab Limited's net asset was 292, less than the carrying amount. This is a taxable temporal difference. So once you have the temporal difference, you multiply with the tax rate. You have a deferred tax as at the end of the year. So we take 292 times the 30%. So that is the deferred tax by the end of the year. So that is 87,600. That is the 87,600. That is the 87,600. Then finally, we have the current liabilities. So for the current liabilities, we talk about trade payables. You can check that one from the trial balance. Is 259,860. So 259,860. So the 259,860. We have bank overdraft. Bank overdraft of 43,100. We have the bank overdraft of 43,100. Then finally, there was that current tax, which was supposed to be paid in the current year. So the one in 03, they say that Powerbo estimated that income tax provision was 113.8 million required for the year 31st March 2021. So that is the current tax, which was to be provided in the current period. That is as at 31st March 2021. So the current tax of 113,800 of 113,800. So what we do, let's check if the question is balancing. So we have the total equity and liabilities. Total equity and the liabilities. So for the total assets, so the 91,960, the 91,950, not 91, 91,5960. So that is 915,960 plus 324,500 plus 469,700. So this is 1710, 160. Let us take for the equities and liabilities. So we have a 672 plus 48,000 plus 35,000 plus 450, 800. So this one is owner's equity of 1205. That is 1,205,800 plus 87,600 plus 259,860 plus 43,100 plus 113,800. So you can see it's 1710, 160. The 1710, 160. So you can see our question is balanced. And we always balance the question because you know the accounting question is asset is equals to the capital plus liabilities. Asset is equals to the capital plus the liabilities. And that is what we have done. And our question is balancing. So I promised that I was to show you on how they were marking these two statements. On how they were marking these two statements. So remember that the workings are never marked. Workings are never marked. The workings are never marked. So this is the income statement which they marked, of which they were the income statement, that is the statement of profit and loss, that is the current name. They were just in need of just four correct entries, only four correct. So in this income statement of ours, in this income statement of ours, this is the way they marked the income statement. So how many marks were needed? 8 marks. How would you score 8 marks? We have a lot of, so they were in need of 8 marks here. So how did they mark? So if I mark the entries you have made, I will say the entries are 1, 2. They don't mark totals. 1, 2, 3, 4, 5, 6, 6. We have 7. Because now this one will go to the statement of financial position. It can be adjusted here or the statement of financial position. So they can decide to give you 2 marks there, let's say. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. So we have 9 entries, 9. But they were not even in need of 9. Out of the 9, they needed only 4 correct. So that once you get the 4 correct entries, any 4, they multiply with 2. You get 8. They multiply with 2. You get 8. And that is what you can see was done in this marking scheme of ours. 4 times 2. 4 times 2. Any 4 correct out of these entries you have made, any 4 correct, you multiply by 2. You get your 8 marks. Out of the 9, you can't miss 4. Like now I can show you the 4 which are even, you could have not even struggled to get the 4. For the admin, distribution, revenue, there was no working for revenue, there was no working for admin, there was no working for distribution, and there was no working for finance cost. That's all. You have the 4. You have the 8 marks. How can you fail now the exam? How can you fail? Let us check on how they marked the statement of financial position. Under the statement of financial position, this was having 12 marks. How would you get the 12 marks? Let us check the ticks they were giving. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We're having 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we have 11 entries you could have made. But now they were not in need of 11. They were in need of only 6 correct entries. So that once you get your 6 correct, out of the 11, they multiply by 2. You get your 12 marks. You get your 12 marks. That is what is in our marking scheme here. And that is what is in this marking scheme. That is what in this marking scheme. So you can see they were in need of any 6. Any 6, they multiply by 2. You get your 12. Ask yourself again, if you failed, what did you did in that exam? But anyway, maybe if you are in this platform, I don't think you failed this paper. But no, due to lack of awareness, for the one who have joined now, I wish you all the best in the coming paper, in the coming sitting, that is April sitting. The same way will be applied. Use this channel well, utilize the channel very well, and you can't go wrong. And at the same time, I'm providing online classes, online tuition. We do our classes during the evening hours, that is 8 p.m. to 10 p.m. That is on Wednesday and Thursday, and the Saturday evening. So you can join. It's on a friendly price. Never look at the cost. It's not as much, because for the online classes, I'm charging a friendly amount. You can be able to call me so that I will share my charges. So my number is obvious in the profile of my YouTube channel, and at the same time, I would just record it down there under this video. But at the same time, my number is 0728 760 546. You are free to call anytime and do the inquiry. You will be able to get me direct through that number. So in this statement of financial position, again, there was some other items which were just free. They never required any workings. So you could have scored the 6 entries without struggle. Like now, the first one is inventory, no working. Trade receivables, there is no working needed there. Payables, there is no working. Bank overdraft, no working. Current tax, no working. So that is around 1, 2, 3, 4, 5. Then if you could have remembered now the deferred tax, you could have recorded. That is 6 entries without struggling. My good students, never fail due to lack of awareness, and never hide this information I'm sharing. Just share and share to your students, to the colleagues outside Nairobi, all over. Because like now, even the students from Rwanda who are CPA students and the one doing IKPAL, these things will assist you. The information I'm giving out, it's very few individuals who can be able to tell you this information. You are here to excel and at the same time to understand and apply this in the accounting world. So have a nice weekend. This video is recorded on a Saturday morning. Have a nice support. Have a nice support for the friends from the SDA. And generally have a nice weekend, guys. So that we meet on our next video when I will be doing the same sitting, but now the question for consolidation. Then after consolidation, I would have to do the question for partnership on the same sitting. That is December 21, 2021 sitting. Subscribe to the channel and share this video widely. Have a nice day ahead. Thank you. For any inquiries, my number is 0728 760 546. CPA do not show from Kenya.